Okay, welcome to the Bullish Bear podcast. This is episode 2, and today we are going to be talking about fear of entering. If you haven't subscribed, please click the subscribe button and get notified of every single time we discuss the taboo topics of trading. So, fear of entering. I think what well, we're going to talk about fear of entering first, and I think fear of entering comes from especially if you're trading a prop firm account, because when you trade a prop firm account, you look on your screen, you've got £100,000, okay, and you think to yourself, I don't want to make losses. I need to hit my evaluation process. I need to get it to whatever your target is, and you, the fear of losing just stops you from entering trades. There's so many times in the beginning of my trading journey where, like, if I'd taken a loss before, especially after I blew my first account, the second time I missed hundreds of trades because I thought, especially as soon as you've opened your second account, because you've got in your back of your mind that you've just blown an account, or it's the same as when you've taken a loss on a previous day, and you end up thinking to yourself, I'm not sure, I'm 80-20. And even if you're 99% that the trade's going to go your way, you don't take the trade. How do you guys feel about that?
Yeah, I think there's so many things that spiral off of the fear, right? I think if you go back to, I was reading like a bunch of like articles around fear, um, and like really kind of taking it back to like the origins of fear and what it does to us as kind of like humans, right? And I read this kind of like stuck in my mind about fear. And it says fear causes traders to self-sabotage so they can fulfill their self-fulfilling prophecy of trading failure. Fear causes traders to find reasons to avoid taking trades that would have been winners. And I think if you're about to take a trade and you have that the feeling of fear inside, then you're already starting on the back foot already, and because you're not starting. We said it in the last podcast as well, right? About having a winning mentality when you're moving it, when you're going to take a trade. Where does that winning mentality come from, right? It comes from our analysis, right? Again, going back to that, comes from the analysis of what happened the day before, what happened when we was at that level before, the number of different indicators that we teach inside our community. If we're doing those things, then we're not gonna fear taking that trade. That's not to say you can't lose the trade, right? But you're not going to fear taking that trade because losing is part and parcel of this business. But obviously, mitigating that is very very important. Um, so I think that that's definitely the psychological piece of it is just it's almost like second to none. Um, Saj, got anything to add on that part? Oh, I think you're mute still.
Yeah, sorry. For me, I think the fear of entering a trade is natural, right? Like when you put it into perspective and you've, I don't know, lost 50 quid on a trade that you've just placed, you sort of monetize it in a way and you start thinking, oh, 50 quid, I could have, done my weekly food shop with it. But ultimately, I think Min said when we even joined the group, like you're not going to be able to make a success of anything, right? Even when it comes to getting a degree or opening a business, you're going to have sunk costs. And I think accepting losses when taking trades without fear is just a part of it, right? I mean, you're not going to be able to go to uni for free these days, and the same way that how that applies to university, at some point you will take losses, and I'm sure there's very few, if not zero, traders out there that will come and tell you that they've never lost a trade, because that's impossible, right? they will lose trades, but ultimately it comes back to your risk tolerance, your risk management, and if you are strict with those, there shouldn't be any fear. And the other thing I would say about fear of entering is I've blown 2 accounts on options, right? I funded my first one in January last year, refunded it again back in March, and then blew that as well. So effectively, I'm down basically $1,000 now. But how I got out of that was, there's a saying, you'll miss 100% of the chances and the shots that you don't take. So at some point you will have to draw the line. Yes, we have the 3 trade rule where we only, look for 3 trades in a day, because that's normally all it takes. And that's usually where the best moves are, right? You can limit it down to 3, but once you get better and better, I think it's easier and easier to stick to that rule. But you shouldn't be fearful of entering a trade with the view of, oh, I might lose money, because you could enter, let's say, 3 trades. The first 2 might be £20 losses, and the third one that you have could be £100 win, and that's a £60 profit overall, right? Whereas if you let the fear get to you and you've taken that first loss and the second loss and call it a day there, you're going to end on minus 40. Whereas that next trade could have been the one to take you back up. And looking back on Friday, just gone, I had bias, which we'll obviously come on to later, but additionally to that was the fear of entering. But if I had that fear of entering throughout the day, after my first few trades in the day, I would have stopped and called it quits and would have ended the day on like minus 50 or minus 80 or whatever it was that I was down in the AM session. But if I had let that get to me, that's where I would have stopped. But I didn't let it affect my next trade, right? I didn't let it stop me and stop my confidence, because ultimately through my paper trading journey, I've noticed that yes, sometimes you will take losses and it could be your first 2 trades, but the next 2, 3, 4 after that would all be green. So it is about balance. Again, you will lose some, you will win some, but it's about keeping the winners running and maximizing those wins as much as possible, and then minimizing those losses
I think
without the fear.
I think there's a secondary problem that stems from fear of entering. Let's just say you spot an A+ setup, okay, and you don't enter, and that trade goes up 3-4 points.
Yeah.
The moment the market pulls back slightly from those 3-4 points, you're going to think, I need to enter now, because I missed out on the first opportunity. This is the second. But really, it could be a break of structure or a change of direction. And then you haven't entered your original A+ setup, and you've entered maybe a C or a D setup and lost money, which then adds even more fear to the original trade that you didn't enter. So then in the next trade that you think about entering, you're less likely to enter, because you didn't enter the first one. You entered a trade that was a worse, not a great setup, and then lost money. And also as well, like I think there's a few things that stem from fear, and it's missing. So what missing out is one of them. So they think to themselves, oh, if I enter this trade now, then I'm gonna miss out, okay, because the market's moved, which is almost, you originally feared the market moves your direction, so you enter a trade because you're in fear of missing out, okay, when you should have entered the trade when you had the initial plan to enter. The second one, I think, is the worst one of all, and it's being wrong. Like, so many traders are scared to be wrong that they don't enter the trade. And I think a lot of it comes down to planning. Okay? Because let's just say before market opens, you've got a clear line or a point in the chart where you're going to enter. The moment the market gets there, you have to execute your plan. Because otherwise, the rest of the day, you're going to be just trying to search for setups that are not part of your plan, and you end up losing. Now, I'll give you an example. So on Friday, my plan, as you guys always know, is I only take a reaction at the pre-market high and the pre-market low. There are days where I might trade in between the 20 and the 5 EMA, but when the 5 EMA and the 20 EMA is not there, my plan is always to take a break of pre-market high and a break of pre-market low. Now, we got to we got to pre-market low, did we, on Friday? Let me see.
I
We
think
got
we
to
quite a bit early
yeah,
morning.
we got near pre-market low, and we bounced off. The SPY has these weird wicks, but we bounced off the first green wick. Okay, but I didn't take the trade, and the reason I didn't take the trade is because it was OPEX week, and we were very close to all-time high. So I said to myself, I'm going to take a reaction at pre-market high. So as soon as pre-market high got touched, I took a put because it bounced, and then the market went the opposite way and started pre-market high started to act as support. So I went into calls, but I had to wait almost. Let me see how long that was. I had to wait 3.5 hours for that to execute. Okay, and I always say this to people: if you sit in front of the charts and your entry point is far away, just set alerts and come back. Because what ends up happening is those 3 hours you're itching to take a trade because you haven't traded. The best practice to do to be able to execute your plan is set alerts where your plan's going to materialize and leave the charts and come back. TradingView is very good. It can send you a ping to your message to your phone. And also as well, like this doesn't really get spoken about, but like if your loved ones or your partner knows you're trading, there is a fear of being able to like go to that person after and be like, you know what, like I lost 200 quid today in the market, or I lost £1,000, or I lost £2,000. So what ends up happening is, if you're not 100% sure if a trade's going to go your way, you don't take it. But I think people have to realize that the best traders in the world, as Saj says, take losses. Okay, and there's a statement that someone said, one of a famous trader said, and he said, the best traders are also the best losers. Okay, because they execute their plan, and if it doesn't go their way, they make sure the losses are minimum. But you have to execute your plan, and because what I just want you to know that if you don't execute your plan, and the market moves away from where your plan was, you're going to end up taking a worse trade, and your chances of making a loss are higher. Obviously, the reason why you've made a pre-market plan is to identify where is the lowest probability that I can enter a trade and make a loss, right? That's why we have a plan. So if you don't execute your plan when it materializes, you're going to end up taking a trade where the probability of you taking a loss are way higher. So that's the whole point of a pre-market plan and planning. You identify on the chart where is the best place I can take a trade where it's way higher likely to go my way.
I think one important question to ask to the both of you as well is, what do you do in an instance where your pre-market plan doesn't materialize, right? Because we can plan and have pre-market plans all we want, but ultimately the market will do what it wants to do. So in that situation, how do you deal with the fear of entering? Do you replan in that moment? Do you look for new clues? Do you change the structure lines or trend lines on your chart? What steps do you take to then adapt?
So what I normally
Yeah.
have, I normally have a bullish and a bearish plan.
Mhm.
Now, if they don't execute, then it's a sideways day, is the way I look at it. There is either a bullish plan if the market's going up, this is the plan. If there's a bearish, if we're going to go down, this is the plan. But ultimately, it's my pre-market plan is always not to enter a trade until we get to pre-market high or pre-market low.
Yeah.
Because
Yeah.
inside there is no man's land in my eyes. That means we're in the same area and we're going to stay in there for a long time in sideways action. Don't get me wrong, I will trade sideways action. If it gets to like the PM session and we're still in there, I wouldn't throw away my pre-market plan, but if I see an opportunity in there I will take an opportunity. However, my tolerance to holding the trade is way lower. So if I enter a trade, if we're moving sideways, I will look at again where is the highest probability that I can take a trade. So, i.e., this is the top of the range, this is the bottom. We're moving sideways. I'm only entering calls at the bottom. I'm only entering puts at the bottom. And even then, if my trade is up like 20, 30%, I'll just take the profits.
I think, just coming off the back of that there, right? Um, to attempt to answer the first part of your question, Saj, if your pre-market plan is not materializing, as a new trader, you just don't take a trade, right? You shouldn't be taking a trade. It's simple as that, right? What Minesh had just said about trading sideways action, that really comes from someone that's got good experience now trading. Do you know what I mean? Someone who understands, who really sticks to the principles of trading, sticking to your pre-market plan, but trading sideways action, I could almost say almost certainly, more often than not, is what will lead to people losing money, particularly with new traders. Because what you're doing, you're not being patient anymore, right? You're looking at the market, you're seeing that it's going sideways. You're not, the pre-market low or pre-market high hasn't broken. You've been sitting in front of the computer for 2 hours and you're itching to take a trade, right? And then you end up forcing something which wasn't part of your pre-market plan, right? And guess what happens? You're going to end up losing, right? And that leads that in my certainly in my journey of trading has happened more often than not, and um, you know, if you don't trade, what's the worst that happens? You just don't lose no money. You might not gain nothing, but you haven't lost any money. And trust me, if you can sit in front of the computer for 2 hours, and not take a trade because you're sticking to your pre-market plan, and then on the third hour, your pre-market plan starts to materialize, the rewarding feeling as a trader is the best, right? It's the best feeling. It gives you more confidence going into your trades, whether there's that same day or the next day or whatever, right? Because you said to yourself, you know what, I stuck to my pre-market plan. I remained patient whilst everybody else was probably getting chopped up inside that sideways action, right? And I stayed out. I've only got, $100 my risk tolerance today was only $100, and ended up making, 50% of that, right? It makes you just feel so much better, and it does wonders for your mentality when going into it.
And
Um,
executing your plan as well will help going forward, you know?
Yeah, I've had days, certainly had days where I've sat in front of the computer all day long, not taking a trade, and then the last half an hour of the day, your pre-market plan suddenly starts to materialize, you know, and you make money, right? There's certainly someone else there on the other side, right, that has been probably taken 10 trades and have been in the minus the whole time. And then at the end of the day, like watch the market go up because they've given up, because they've said to themselves, you know what, I'm not trading no more today. I've been in red all day today. I haven't been able to like take a winning trade. And then suddenly, right at the end of the day, the market materializes, their pre-market plan materializes, and they don't make no money, right? So it's the pre-market plan piece is probably the single most important thing when dealing with fear of trading. Going back a little bit in terms of being able to try and classify what leads to it, right? What are the main reasons that lead to it? I mean, you said it for sure. And I think for listeners to resonate with you guys, because we've all been there, and to some degree, I want to say we're still there, because I've certainly lost a lot of capital trading initially because I wasn't sticking to these things, right? But again, like trying to classify it, right? I think certainly the fear of being wrong is prevalent in everybody's mind when they are trading, right? And I don't think that's ever 100% going to go out of everybody's minds. right? But it's how you manage that. You know, how do you manage that if when your trade does go the other way? And that immediately, if you have a gain plan and you have a plan of when you're going to get out, if the trade goes your way, goes against you, then you shouldn't really be fearing because that plan should be, you know, you should really be minimizing um, the loss when it doesn't go your way. Of course, the obvious, right? The fear of losing money, right? Who wants to lose money, right? No, I don't want to lose money. Nobody wants to get into this business to lose money, and so really not having a plan of how much money you're going to lose when the market goes against you is going to always always lead to you fearing entering the market. Always,
I
you
think
know.
when you make your pre-market plan, you have to be able to identify that what is your tolerance for this trade? What is your tolerance of losing money for this trade? Okay. At what point are you going to get out if it goes the opposite way?
Right, right, exactly. And then, so that's two. A third one, without a doubt, in my head, is fear of missing out, right? FOMO is one of the most prevalent things in this industry. I certainly dealt with it a lot at the beginning. I don't know about you guys, and there's still sometimes it happens. I mean, it happened just on Friday, right? I did not trade on Friday because I had some other things to do, right? And there was times where I'd open up my phone and think, I'm going to trade, I'm going to trade. And back in the day, I'd be driving and I would take the trade. No real analysis, because of course you have a pre-market analysis, but then the market actually we're in the market now, and then the market might choose to do something else altogether. So you have to pivot, right? But again, I hadn't done any analysis at all, really, because the market started doing something different. And so I thought I'm not going to take the trade. But at the end of the day, I definitely felt a bit of FOMO for sure because we had a big move up and I didn't catch any of that, right? But if I was in on the day and I'm an inexperienced trader and I'm trying to, you know, trying to call where the market's going to go, you know, that's where the FOMO comes along, right? Or what means what you said earlier on, you see a big move up, right? And then you think, okay, I'm gonna wait for a retracement, right? And I'm gonna jump in, or I'm gonna, and then you start losing money because the market's going like you've missed that move already, and rather than trying to jump in on it now when the move's already happened, be patient and wait for it to either happen again or see what happens next. Right. The other one is I think that leads to fear of entering or maybe even like losses is like leaving money on the table, right? Some people are, your trade goes the way that you want it to go. And again, coming back to the plan, right? If you don't have an exit strategy, right, then you're either going to leave that trade to run way longer than what you had planned. And then what happens? Everyone's seen it, right? Your trade goes up nicely, and then you're like, "This is going to keep going. It's going to keep going," because you had no idea when you're going to come out, and then the trade goes the opposite way. Instead of having to, instead of taking your trade plus $100, you end up closing in a minus, right, or break even, right, and then that that there is, that leads to you entering again, right, or losing money. And I think everyone, I don't know about you, you guys tell me, but I've certainly for me, those four things have definitely like, been part of my journey so far.
I'm just going to read out something that one of our students said to me on Friday. I went. They said I'm hating it this week, so I asked them why, and I said because I missed the move and always think I'm too late, and therefore scared to enter at the highest or lowest point of the day, and that just reflects on what we said. So if they miss the move, they're scared to enter because they think that they maybe the move's finished or the move has come to an end and they might enter and take a loss. But again, if you don't execute your plan, that is what's going to happen. You're going to be tempted to enter into a trade. Now, don't get me wrong. If this certain person had entered when they messaged me, they would have still caught a 4-point move. But it's that fear that comes back into your mind because your plan didn't execute or you didn't have a plan in the first place. Now, when on Friday, when my pre-market plan executed, and I'm just gonna have a look at my 5-minute chart here. So by the time my pre-market plan executed, we had already moved. We'd already moved 3 points. Okay, so there was already been a 3-point move when my pre-market plan executed. So, sorry, a 2-point move. So at this point now, my trade is always a reaction to pre-market high and low. So this is why I took puts at this point, because we'd already moved 2 points and we were in all-time high territory. When the puts didn't work and the resistance broke, and then the resistance started acting as support, I straight away entered calls because it looked like I shouldn't have gone against the trend then. I should have just carried on the trend. But at the same time, I had to execute my plan because it materialized. You know, even though we'd moved 2 points up, follow the trend, execute your plan. That was the point of where my plan was written down to execute. I have to execute, because if I had missed that and the market continued to move up, now from that point the market moved up. It moved up another 2.7 points. So if I hadn't have executed, I might have got to like the 1 point mark and had a 50-50 inkling whether to enter. Whereas before I might have had, I'm 90% right here, 10%. Yeah. And then you start having more stress on your trade. You might not enter on a pullback, and so on and so on. And it all comes down to the fear of entering. What people have to realize as well, especially if you're using a prop firm account. Now, most of the people that use a prop firm account, especially in our trading community, they're paying £40 a month. Okay. When you go out for a meal with your partner, or you go to the pub with your friends and you're buying a round, that's costing you about £40. Okay. That's how much you're paying to trade on a 100k account for the whole month.
Yeah.
So you're not even risking your own capital. So making losses of your own money, it isn't like how it was before, where you'd save up £1,000 and put it in. Me, Yaks and Saj have blown accounts with our own money. You know, own money, own hard-earned money outside of trading. Came in, brought that hard-earned money into trading and traded it and lost it.
Mm-hmm.
So the fact that you're only risking £40, now let's be honest, and if your account gets blown on an evaluation account, you can pay another £40 or 50, or so. I think it's about between £40 and £60 to have the account reset. So the fear of trading, if you have fear of losing £40, you have to try and think to yourself, I've just spent that at the pub at the weekend.
I think the other thing as well means on that, right? Your sunk cost for the month is going to be about £40 or $48 or whatever it is for the prop firm account, right? So ultimately, even if you do take a loss of minus 50 or minus 100 on your prop firm account, the actual effect that it's having on your actual bank balance that you're using to spend on living costs and everything is literally just that subscription fee. Your trading screen can say minus whatever it wants, and ultimately the only thing you are still losing is the maximum amount of your monthly subscription fee. So I think we as traders, and also in our group, need to realign the way that we look at the losses, especially if you're using the prop firm account. Whereas if you're using your own hard-earned money and you're, on Tastyworks with options and stuff, then it's a little bit different, right? Because that is hard-earned money that you're using, and you might treat the losses a little bit differently, because that £40 is your £40 and now that has gone. But really, with the prop firm, you can lose however much, and ultimately it is just going to be that £40. So I think for everyone using a prop firm, not even in our group, I think it's just a case of realigning your thinking about what you're doing and how you're utilizing the facility of a prop firm, right? They are providing you with the capital and they are risking the money that you could possibly potentially lose. And all you're losing is your £40 monthly subscription. So for me, I obviously did Tasty Works and options with my own money. But since moving to the prop firm, I'm less sensitive and I'm less emotional about the losses that I do take because I have that mindset of, well, I'm paying £40 for this anyway. So let me take the loss. If I am going to take it, I'd rather take the loss on this prop firm account than on a Tasty Works account with my own hard earned money. So it's just about realigning your thinking about what you're actually spending to use the facility.
And
Definitely.
it's so sorry, just before we move it, and it's so much better to take a loss on your plan than
Yeah.
a loss on a random trade you've taken, which you have no idea why you've taken it. And it always comes down to when you're entering a trade, you have to ask yourself, why am I taking this trade? How much money am I willing to risk? Where is my exit plan if it goes the opposite way? And where is my take profits? Those four questions should be in your head.
Mhm.
So whenever I enter a trade, I'm like, this is where I'm getting out because looks like where it could potentially get to. And if it gets to here, then the trade's dead.
Yeah.
You have to ask yourself that question. And whenever I enter a trade, if I'm doing one mez contract, for example, right, the maximum I'm willing to lose on that trade is £15 maximum. No matter what is going on in front of me, if that trade gets to -15, I'm out. And
Definitely.
because I've accepted that loss before I enter, I don't care if I'm a loser trade.
Yeah.
It doesn't really affects me like that, you know?
But how much of so obviously when you started trading, you know, your experience was a lot less. And something that obviously I learned once I went live and funded my own account was just the relating to the fear of entering is the ego, right? Because equally the fear of entering, the flip side is the fear of exiting. And when I first started trading, you know, I let a contract run about 5 points in the opposite direction, and eventually, on that day, I got lucky, and it come back down to my entry point. But because it was options, the contract deterioration killed me, and I ended up still taking like a £30 loss on it. But I think well, the non tangible aspect of trading and fear of entering is also the ego, right? Because if you and your ego say, I don't want to accept this loss at £30, and then you let it carry on, you know, it could get to like -60, -90, and before you know it, you've dug yourself such a massive hole that even if you did get your next trade right, you know,
Go
because
down.
of that ego and refusal to accept that you were wrong and you've lost, has got you into this position where you, even if your next trade is a £60 win, you're still -30 on the day. So I think
Yeah.
the ego and accepting the loss is also a really important thing to highlight.
I think that as well, you can't teach that. Like, I think you have to go through that
Yeah,
of not accepting that you're not um you're not correct in this particular situation and holding a trade till it's like -50, 100 on one mez contract. You can't really teach someone how to do that. But I think that stems from when you entered the trade, you never had a number in your head that you're willing to close the trade at.
yeah,
And that's what it look, I think in the end, that's what it will always come back to, right? Is what's your plan? What's your pre-market plan? How are you coming to your trading day? Because again, I'm probably the most notorious one out of us that did that, right? In terms of allowing out a loss to like just keep running. And Benji used to always say to me, you gotta get your ego out of the way. And my ego even more would say, "It's not my ego. It's not my ego at all." You know, I just think it's gonna go. It's gonna come back. It's gonna come back. I know it's gonna come back. Biased ego, whatever you want to call it, right? Is you've got something that's negatively affecting you right now, and it's
mhm,
down to you. It's not down to anybody else. Not down to the people that you're trading with. It's not down to the market, right? Because the market doesn't care about anybody, and anyone tries to blame anything on the market, you're in the wrong business, right? But at the end of the day, it is down to you, and it's down to the fact that you simply do not have a pre-market plan coming into it. You haven't really done any real analysis before you're attacking that day, right? You can't be because if you did, you would get out of your own way, right? And you would cut your loss, right? And see what happens with the market now. Because and that happened to me. I think I don't even want to say how much I used to let my losses run, but it definitely went into the thousands at times, because I thought it would come back. And to Saj's point, it would end up coming back, right? But at that point, because at the time I was trading with my own capital and was trading options, the deterioration you would just kill the price,
Yeah.
and again you would come into it thinking when the loss happens, it's going to come back. It did this yesterday. I know I saw that yesterday, and then I exited the trade, and then it ended up coming back. And I would have, if I would have held, Hamza has always said that if I would have held, I would have ended up making more money. I would have done that.
But again,
And
again, that is, you have your pre-market plan, and then you should have a plan of when you enter a trade. Right, I'm entering here. In back of my mind, -15, I'm out, and this is the point I take profits. And you know what? More to do with ego is your trade is up 200% and you're still holding the trade. I've seen it in the group so many times. And like, do you know, when in the group, when people post their gains, and sometimes I see some of the trades that people enter, and people don't really know this, but I'll look at where you entered and where you ended up having a negative. I don't really look at people's positive trades because I think there's more to learn from people's losses. And I see some of the trades that people take, even paper trading, and I think to myself, you was up 60, 70 pounds, and now that trade has finished at a loss of -20. And
Yeah.
again, that comes down to a point of like, when you enter a trade, where are you getting out? Listen, I've done it so many times. I've entered a trade. This is my point of getting out, and I've probably made maybe 200-300 pounds per account, right? And like yesterday, like on Friday, I got out at exactly 481.76, yeah, on my MES trade. The market moved up maybe another 50 point, 0.5 it ended up. But because I had a strict plan of where to get out, I just got out. After that, I'm not worrying about, oh my God, like I missed out on one extra point, because that is then going to affect your next trade. Because if, let's just say you made £200 on a trade, right? And then you got out, and then the trade ended up carrying on for another point. The next time you take a trade, you're going to hold on to it for too long.
Yeah. I've
because
had that many times before.
because what happened previously is going to be on your mind. You can't let that affect you. You have to just still have a point of where you're going to get in and where you're going to get out.
But just on your point there, Mins, about you can't really teach your ego or someone else's ego to accept a loss, right? Because I'm sure the most difficult thing for all of us, right, even if you're a new trader or a more experienced trader, the hardest thing to do is click on that X button once it's in the red, right? Whereas the opposite, the easiest thing to do is click that X button when you're in green. But if you relate this back to fear of entering, right? If you have the fear of entering, you're never going to take that position. And let's assume you do take that position and it does end up getting to a -15, and then you close that trade, right? Yes, okay, you've taken the -15 loss, but rather than doing nothing and missing the entry, or not following your plan, yes, with the -15 loss, it's a -15, but the lesson you've learned out of it is you're teaching your ego and training yourself, and eventually becoming numb to it, like where Mins is at now, where if it's -15, it's -15. Let me cut it, right? Whereas if you never have to cut a trade at -15, the first time you do, it's going to hurt you. But the more and more you do it, the more and more exposure you have to it, you're going to be so used to it that it's just going to be second nature. You're going to like dust it off your shoulder.
The feeling when I press the X and it's a loss is that taking a loss. Do you know what I mean? But then literally, I'm I'm back on the prowl. Like, like where
I don't even feel it no more. I don't even like. It's just a button that I press, right? And and I'm just onto the next trade immediately, right? Like, as in not taking the next trade, but thinking about the next trade already. I'm not thinking about shit. I mean, of course, unless I've not stuck to my pre-market plan again, right? And I've allowed my losses to run way much more deeper than what I had originally, anticipated, then I might dwell on it, right? But I just don't think about it. I just cut it, and then I'm waiting. I'm waiting for the next move.
But
That's
that's
it.
because you're used to it now, right? You're
Yeah,
you're
because it happens so much to me. It happens so much to me, that it doesn't matter. But not that it doesn't matter that I'm losing money. Of course it matters. How can it not, right?
yeah.
But I just don't feel I don't dwell on it, and I don't allow it. I don't sit there. I definitely don't sit there and think, damn, I'm down 60, $70. I need to make that back and get back on top, because that could lead to even more, right? And that has led to even more in the past. So I think,
I
again,
think I think
let me just finish this one point here, right? About the fear of entering, right? I think if you have, of course, the plan, all that was part of the plan. I think having a solid risk management strategy, right? A solid risk management strategy will really, really reduce that fear of going in. Because if even if you didn't do like loads of other analysis, finding out where key levels are, understanding what key data is coming out today, all of that stuff, which is all very, very, very important and just as important as risk management. But if you really work on a really robust risk management strategy, then your fear will really, really, really be reduced massively, because already, I'm never letting it go past $10. I'm never letting it go past $15. Now, if you've taken 3 trades and they've all gone negatively, then hey, if you've got a tight loss, a stop loss or risk management strategy, then you'll never, you can have days of I'm losing 50 today, I'm losing 50 today, I'm losing 50 today. But then on the fourth day, right, you're going to end up making 200-300, because you've got a very, very robust risk management strategy.
I'll just give you some numbers. So let's just say your risk tolerance is £20, okay, on one MES contract, and you open up a Apex 100k static account, so you got a stop loss of 600. If your tolerance, your stop loss is at 20 minus 20, yeah, you are allowed to take 30 trades, okay, 30 trades at minus 20. Now let's say, for example, you take 3 trades a day. That's going to be 10 days of you being able to trade, and it's costing you £40. So I think if you end up having a 20 to £15 tolerance per trade, then you can easily, it's not going to affect your account. So taking a loss won't affect you that much.
There's one thing I've seen is there's a popular trader and he's quite successful. You guys have probably heard of the name Umar Ashraf. So he did not investigation, but he did a review of 2 different types of traders, right? So one had like a 65% win rate, and the other had a 40% win rate. And it was like a little quiz thing on his Instagram, like which of these 2 traders do you think is more profitable, right? And when he reveals the answers, it shows that the individual who actually had a lower success rate in terms of winning trades ended up making more money, because they were able to keep their winning trades running for longer, and they had their risk management a lot stricter, which is why their loss percentage is inflated, because they're taking more losses at like minus 15 or minus 10, whereas the trader who was taking a lesser percentage of a loss was taking them in terms of massive values, but his 60% of trades that were winning were either a one-to-one reward to risks situation with the losses that he was making. So he would win one trade for 50, and then the next trade he would lose for 50 or maybe more. So yes, you will lose trades, and I think you need to take the shots that present themselves. And if you are going to take a loss, you could still have a less than 50% win rate, but if you have appropriate risk management, you're still going to be able to make a success of it, and you should still see your account grow. So I don't want people to have that fear of entering, because one, it will help you in terms of your gains. It will, teach your ego to accept the losses, and ultimately it will help you grow your account. So that's my view on, fear of entering. Take the shots that present themselves, have the conviction, follow your plan, and stick to
Okay,
it.
shall we do bias now or shall we do it another time?
I mean, I know we've been talking for about an hour almost, so I want our viewers to listen to this.
Do bias as a separate topic then. Yeah,
Yeah, we could do a separate topic. I
that's
want to finish off with my last bit here.
it's all right.
Uh,
I'll edit it to chop that bit out. So
cool.
guys, let's wrap up then. So fear of entering. Final thoughts.
For me, I think is you need to have a solid trading plan going into the day, a solid pre-market analysis going into it, have a solid, robust risk management strategy, right? Know when you're gonna get out of a trade if it goes against you, and know when you're gonna get out of the trade when you're in the plus. They're the two things I would say.
Yeah, I think same as that. I think have your pre-market plan, and also ask yourself the 4 questions before you enter a trade. How much am I willing to lose? Where am I exiting if the trade goes the right way? And how much am I allowing this to go in the opposite way? Because even if you're willing to lose 12.50 or £20, it doesn't mean that you have to let it get to 12.50 or £20. You know, have your exit plan, have your take profit plans, and accept whatever your loss tolerance is for that trade. Just accept it before you press the buy or sell button,
Mm,
and it will allow you to be stress free during the trade.
I think that's everything.
Yeah.
And
Last thing. If you, particularly because we are using the prop trading, firms now, and which is costing $45 a month. If you are fearing losing $45 in a month trading, this might sound harsh, but you shouldn't be trading, right? You should not be trading. Simple as that.
I didn't want to
Because
say
the
this.
gains
Try
are
to be
far bigger.
diplomatic. Yep.
Yeah, the gains are far bigger, and maybe if people might hear that and not want to trade with us, that's okay, right? That's all right, because the gains are far bigger than $45, far bigger, and the bigger picture is eclipses $45. And so that's all I want to say.
One more thing as well. Without any risk, there is no reward.
Yeah.
Okay, you cannot make 3-4 figures a trade without having to have some sort of discomfort and risk.
I think one last thing from me as well, right, is if you, just on Yakub's point there, like if you're not comfortable with losing or spending £45 for the subscription to Apex, then I would recommend going back to the drawing board, going back to paper trading, because yes, okay, it's paper trading, it's not real money, there might not be as much emotion in it, but you will be less fearful of entering a trade, and you will be more accepting of closing a trade in the loss. And once you get used to that feeling of doing it on a paper trading account and you go to a prop firm account, you'll be more numb to it. And that's definitely what I found since paper trading since last March until December. I got so numb to accepting those losses, and I've become less fearful of entering the trades. And throughout that journey of paper trading, it will show you and it will teach you the areas where you're making the mistakes, making the errors. So if you're not comfortable, you're not ready to do the Apex prop firm funded account, go back to the drawing board, spend as long as you need on the paper trading platform, get used to it, and then come back refreshed, because it will only benefit you.
Brilliant.